instrument. As a legal instrument, where it will grant authorities to the rights, privileges, powers, and guidelines that regulate the budget format, timing, and then processes of preparing the budget. So these are some ways that the budget can be used. It can be used as a planning instrument, as a social instrument, economic instrument, and then as a legal instrument, just as we've explained. So what are the objectives of public sector budget? What are the objectives of public sector budget? One is the redistribution of income and wealth. Two is the reallocation of resources. Three is economic growth. Four is public enterprises, and then managing public enterprises. And then five is economic stability. Economic stability. So I would want this class to be very engaging. And so these are objectives. You can pick any of them and then explain what they mean briefly to us. Any of the objectives of public budgeting, and then explain what that is. Will anybody be willing to share? When we say the objective is to redistribute income and wealth, is to reallocate resources, is to prosper economic growth, is to manage public enterprises, and then economic stability, what do we mean? Will anybody be willing to share?
So okay. I'll try the economic growth.
Okay, Abigail. Okay, you can go ahead.
So when we are talking about the economic growth, it helps, a budget helps when it comes to economic growth, because when you want to do something, especially let me deal with the government. If the government wants to do something for the country, he needs to sit down and budget everything. And he needs to know the kind of money which will go into expenditure and the kind of money which goes into health and even construction of roads as well. And so that is my understanding when it comes to the economic growth.
Okay, thank you very much, Abigail. Yusuf.
I want to talk about the redistribution of income and wealth. Here's the case that some of the, let's take Ghana for instance, some of the regions could be generating less than what is expected of them. So when government is preparing its budget, it considers all the income that come, all the revenue that comes, and then do redistribution. This should go to Upper East. This should go to a fair redistribution of the income and wealth. This is how I understand it. When the income comes or when the revenue comes, then government sit down and do his budget very well to meet the various requirements of the various regions.
All right, thank you very much, Yusuf. Any other person? Okay, Daniel.
Can I? Yeah, reallocation of resources.
Okay, sure.
Yeah, there are some regions that are endowed with natural resources than others. So in this case, the government has to collect all the resources, the value it has, then give each region what they need. Because if it's not done like that, some regions can say, okay, I have the oil, so I have to control everything. So with the budget and with the government into this, these resources can be reallocated with each region with how it can. Thank you.
Okay, thank you very much, Daniel. You see if I can still see your hand up. Do you still want to explain?
Then I wanted to talk about the redistribution of resources, and the Daniel has thrown light on it, so it's okay.
Okay, all right. So we have managing public enterprises and then economic stability. Anyone?
I think Gatana can do that.
I can see
Yeah.
Yusuf. Okay.
So I want to talk about the economic stability.
All
Because
right.
government is preparing let's say the fiscal budget, it tries to make sure that all needed resources goes to various regions to stabilize the economy. Because when the budget is not done in accordance with maybe laid down procedures, you may end up deriving some of the regions from their maybe financial allocations. So when government sits down and draw its budget very well, it goes to stabilize the economy in all sectors, in all regions. That's economic stability.
Okay, thank you very much. So we are left with the last one, which is managing public enterprises. So the budget also contains, just as Abigail said, allocations to each specific government agency. And so the budget also helps to manage those public enterprises and all that. So if maybe 100 million is allocated to maybe Ghana or the Youth Employment Agency, then what that means is that 100 million that is allocated will be based on maybe a specific project that YEA wants to embark on. So as a result of that, they basically manage the public enterprises as well through the budget that is being read by the finance minister. Okay, so that is the first session. At the first session, we basically wanted to understand what budget is and how different is budget from budgeting. And then we also looked at the objectives of budgeting. So that is basically the first section that we've looked at. So we'll head on to the next section. Okay, as we move on, if there are any questions, you can raise your hand and then you ask. Okay, so we move on to the second section. This section will be looking at the budget cycle and then approaches to budgeting in the public sector. By the end of this section, we will be looking at how to describe the budget cycle in Ghana, and then we'll also examine the different approaches to public sector budgeting in Ghana. So budget cycle. So the key idea, Yusuf, do you want to say something?
Oh, no, sir.
Okay, all right. So the key idea is that public sector budgeting does not start nor end with the presentation of the budget statement. However, it is an ongoing cycle which involves planning. Yusuf, please, can you mute yourself? Thank you very much. Okay, so rather, the budget is an ongoing cycle which involves planning, approval, execution, and then accountability. So just as we know from what we studied the last time, in Ghana, the specific body which has been entrusted with planning, preparing the budget is the Ministry of Finance. It is the central institution that is responsible for coordinating the entire budget cycle. Okay, and then the role it plays is that it helps in planning and preparing, publication, monitoring, evaluation, and then they also help control the national budget. So that is it. So what is this cycle we are talking about? So there are four main phases or stages or components of the budgetary cycle in Ghana. So number one is the budget formulation phase. Number two is the authorization and approval phase. Number three is the implementation phase. Number four is the audit and evaluation phase. So we'll discuss each of the four phases, one after the other. So budget formulation phase. Now, this phase focuses on planning, and then preparation stage of the budget cycle. So when it comes to the budget formulation, this is where the budget prioritizes its plans into financial plans. And this is to basically help to be able to translate the goals that the government has set to financial plans that will help them to be able to achieve the goals that they've set. Now, one thing we need to note is that when it comes to this particular phase, the process begins with the determination of the macroeconomic framework, and that includes setting projections for economic growth, inflation, revenue mobilization, as well as how much are we going to borrow to augment the projected revenues that we foresee in the future. So all these are plans that the Ministry of Finance, which is the principal agent in formulating the budget, does. Okay, so they will have to first of all determine the macroeconomic framework. By what percentage will the economy grow? How do we foresee inflation? What rate will it be? How effective would be the revenue mobilization, the tax collection processes? How effective will that be? So all of these considerations are done at this budget formulation phase. And then we also have the role that the MDAs or MMDAs, they play in the preparation of the budget. So the MMDAs and the district assemblies, they would try to align their medium-term development plans with the national priorities in the national budget. Okay, so how do they do the alignment? They also develop programs, activities, and performance indicator targets that are accurately costed and aligned with Ghana's medium-term budget plans. So that is the role that the MMDAs they also play. They play the role of ensuring that the national medium-term development policy framework. And these are terms that we will have to understand. NMTDPF. That refers to what is called the National Medium-Term Development Policy Framework, which was enacted to help government. You see, the little issue we have is that we have various political parties in the country, and based on history, at least from 1992, we've experienced the 8-year government succession where NPP will rule for 8 years, NDC rules for 8 years. Now, all these parties have different policy focus. And so how do we integrate these differential policy focus to be able to make sure that at least we have a medium-term plan, 5-year plan that every party will have to buy into? Okay, so for instance, NPP focuses on free SHS, NDC focuses on the big push agenda and all that. However, to ensure that there is a succession plan, there is what is called the National Medium-Term Development Policy Framework, which ensures that various governments continue projects that were set up by previous governments. What they also do is that they set up, the policy set up medium-term development plans that various governments will have to comply with. As to whether that is being done is also a topic for another matter, but we have a policy framework which ensures that there is a medium-term development plan, and that is guided by the National Medium-Term Policy Framework. So that is the NMTDPF. And then we also have the MTEF. When we talk about the MTEF, we are just talking about the medium-term expenditure framework. So in the medium term, 3 to 5 years, we have an expenditure framework that we expect government to comply with. So that is what happens in the budget formulation stage. It is basically the planning and then the preparation stage, which starts by determining how we expect the economy to grow, the inflation target we have for the fiscal year, as well as how effective our revenue mobilization is. And then if we would borrow to augment our revenue to be able to meet our expenditure, by how much are we going to borrow and all that. All this happens in the budget formulation phase. So a good budget formulation process is required for a credible budget and then a predictable outcome. And so these are the main steps involved in the formulation phase. So one is that the government issues a policy paper or a budget framework paper. So that is the first thing that is done, the step one. And then step two, government and cabinet provisional discussion. We are aware of what we mean by government. Some ministers and other elders of the state, they form the cabinet and then they approve this policy paper or the budget framework paper, which would include the revenue, whether new taxes should be imposed, whether we should cancel or we should do away with a particular tax, or should we reduce taxes. All that happens during the policy paper formulation, and then the cabinet sits on it for provisional discussions. So that is followed by the issue of budget circular. The budget circular is just budget instructions, which gives technical guidance for spending agencies. So the document specifies the ceiling, the format, and also the timelines that specific projects will have to be completed, as well as timelines for which maybe a particular tax would be imposed and all that. So that is what the budget circular and instructions is. And then the final step is preparation and submission of budget proposals. So MDAs and then MMDAs, as well as other agencies, they submit their costs as well as their programs and activities, and then they estimate for review. And so that is what is being meant by preparation and submission of budget proposal. So this is done by the MMDAs, state agencies. They submit their budget proposal to the government. So that is the first phase, which is the budget formulation phase. Now we have the authorization and then approval phase. Authorization and then approval phase. So for the national budget, Parliament plays a key role, and the role that it plays is that it functions as what is called the approval authority. So for local governments, the budget approval lies with their respective district assembly. For metropolitan, it lies with the Metropolitan Assembly. So basically, at the district, the municipal or the metropolitan level, that lies with the MMDAs. They approve the budget to be submitted to the finance minister, and then the finance minister also submits the budget to Parliament for Parliament to discuss, debate, and then vote on the national budget, as well as whether they will pass the appropriation bill. All that lies with Parliament. So Parliament is the approval authority with which the budget would be approved, and then it will be authorized for expenditure and all that. So that is another thing we need to note. So this is the process. So one is that the finance ministry will have to examine the various budget proposal that has been submitted to them. They also conduct budget hearing, and then you remember at the formulation stage, but the cabinet, they just discuss what the policy framework they have. But at this point, cabinet also approves it, and then preparation of the finance and then appropriation bill is done by the finance minister. The revenue collection procedures, and then examination and approval of the budget estimate is also done at this stage. We also have the next step is the implementation phase. Implementation phase. So what do we mean by that? By that, we mean that the implementation phase is what involves the release and utilization of funds to deliver programs and services that the MMDAs as well as other state agencies wants to embark on. So it is this stage that we see that roads are being constructed, schools are being funded, salaries are being paid, and then also social interventions, just as we indicated earlier, are being delivered. So basically, the finance ministry will have to release funds for the various projects that various MMDAs as well as state agency or even the central government wants to embark on. So that is the stage. This is what the stage does. This stage does. And then we also have the procedures for implementation. So we have the Provisional Appropriation Act, which guides the appropriation, whether we would want to spend or not. That is that, and then the release of funds to meet expenditure. That's also done at this stage. And then we have the last phase, which is the audit and evaluation. We spoke extensively about audit the last time in our previous lesson. And so the process or the cycle, it ends with the accounting records of the spending organizations. And those records are being examined and audited to determine whether the departmental expenditure are within the boundaries of approved estimates of legislature. Okay, if this is done, the audit and the evaluation is supposed to instill a sense of accountability and transparency on how government of Ghana spends limited resources to deliver essential public services. So this is the last phase or the end of the cycle of the budget preparation. So it is just to audit and then evaluate. Audit is just to account for the expenditures that has been made. We evaluate where we fell short, where we did well, where we did not do well, to be able to work on it and then progress in the next phase of the budget or the subsequent year, progress in the subsequent year. So that is it for the phase of or the budget cycle. This is what we mean when we talk about the budget cycle. It just goes through these four main phases. Okay. Are there any questions? I hope there are no questions, right? So we will then look at approaches to budgeting in the public sector. So there are two main approaches, as well as other approaches that the government used to be able to come up with the budgets that we see the finance minister read. One of them is the top-down approach. Top-down approach. So what do we mean by top-down approach? So with this approach, the sense of the approach is that we want to prioritize national development goals and then macroeconomic stability. So what this approach does is that the central government would start the preparation of the budget. Okay, so when it comes to the suggestions for the budget and input, they may be taken from the agencies before its preparation, but considerations to their suggestions for the budget preparation is solely on government discretion. So the government tries to prepare the budget for all state agencies, but then they seek suggestions from the agencies and the MMDAs before the preparation. However, whatever suggestions the MMDAs and agencies will give is solely the government discretion as to whether to comply or not to comply. So in essence, the top-down approach is just that the central government, when it comes to decisions, be it revenue or expenditure, it originates from the central government and then it passes down to the implementing agencies. Okay, so it starts from the central government. They will come up with their policy framework, and then it passes down to the agencies as to what they have to do. So that is the top down. So the top down meaning that the central bank starts the process. That's where decisions for even MMDAs and the state agencies, that's where it originates from. And then the implementing agencies, be it the agencies or the MMDAs, they will have to comply with what the government has said. However, the government may take some inputs from them, but whether to comply with is solely dependent on government's discretion. So that is it about the top-down. Now, what are the advantages of this top-down approach? Now, it will help the overall corporate financial approach, since government's concern will be overall growth for the organization. So the overall corporate functional approach, you see, if the government wants to stabilize maybe the CD, or it wants to hit a certain economic growth target, the government would, since it is solely concerned with the preparation of the budget, to be able to effectively do that. Okay, if you allow the MMDAs to start, they would do what they want to do and what best suits them. But since the government wants to achieve a certain target, one advantage of it is that it will help to be able to achieve the overall growth rate of the government, because they are solely preparing the budget, and then the implementing agencies will just function and comply with whatever the government sets for them. And then budget preparation will be fast and interdepartmental issues shall be ignored. So since everything starts from the government, it will be fast rather than wait for each MMDA to present its own budget before considerations are made and then approvals are made. Comparing that to that approach, you realize that budget preparation is fast here because the central government has already done everything. And so it does not take much time as compared to when the government will have to wait for each MMDAs to prepare its own budget. Okay, so decision making and then the budget preparation is fast here. And then the budget would be aggressive towards the growth of the country. So since the central government does majority of things with consultation with the MMDAs and state agencies, it is approved that such top-down approach helps to be able to achieve growth target, because the government will basically, it knows how to perfectly redistribute funds to each MMDAs and all that. But if you allow them to prepare their own budget, they may go beyond estimates that the government may want for them and all that. And so to be able to grow the economy at the rates that it has, it is recommended that the top-down approach is better when we want to achieve certain growth targets. Then disadvantages. So it lowers lower management, or those at the lower level of the political class will not be motivated, as they don't have ownership of the budget and tends to feel governments have set practically impossible targets for them. So it demotivates the lower level managers, or those at the lower political class, such as the MMDAs, those are the state agencies, because the budget is basically imposed on them, and then certain targets are set for them. And so it might go beyond the targets that they may be able to achieve. And so because of that, it demotivates those at the lower level of management or the lower level of political class. And then top government may not have close information about the needs of the citizens, and that may impact their budget. Okay, so if the central government sits at the Ministry of Finance and then they prepare budgets for various MMDAs, there is the likelihood that the needs of the citizens in those districts or those state agencies might not be fully addressed. Okay, since the MMDAs are there to support the citizens at that district level, they would know the needs of those citizens better as compared to the central government. And so one disadvantage is that the needs of the citizenry at the district level may not be satisfied, because the government may not know the needs of the government. And then interdepartmental communication may take a hit, as they will have no idea how government sets targets for each of them. So sometimes they do not even know the processes that the government will take. They do not have any idea. The only thing is that it will be imposed on them, and then they will have to comply with it. So that is also a disadvantage when it comes to the top-down approach. We also have the bottom-up approach. So this is just the opposite of what we just discussed. So the bottom-up approach, here lower levels of the political class, they prepare the budget according to information and then past experience, and then they present it to the government for their input as well as their approval. So when it comes to the bottom-up, the budget preparation starts from the lower political class, such as the MMDAs and then the state agencies, and then it goes up to the government for their input, and then the government also approves it. Okay, so the opposite of the top-down approach. Now, what are the advantages? So here, the citizens are motivated because they own the budgets now. Their needs are addressed, and so this approach motivates the citizenry. Here, the budget is more realistic because they have the better knowledge of operations in the organization or in the district or in the metropolitan or the municipal. And then political leaders at the lower level will be more committed since they are setting their own targets and then getting their own budget, preparing their own budget. They feel motivated and committed to achieve the targets that are being set. And then senior government officials will have to concentrate on the overall business strategy of the organization rather than focusing on preparing budgets for each MMDAs. But then, of course, there are some disadvantages. And then one is that budgets might not be at par with the overall objective of the country. Sometimes the budget of the MMDA might even be contrary to what the overall objective of the country or of the central government is. And so that is a disadvantage when it comes to the bottom-up approach. And then budget preparation will be slow. So since government will have to wait for each agency or each MMDA to prepare their own budget and then ask for their input and then approval, it takes a longer period as compared to the top-down approach when it comes to the budget preparation. Okay, and then sometimes the government may lose the control over the forecasting estimates and overall macroeconomic performance and directions. So that is it. We also have the citizen-based budgeting approach. Now, this approach, it integrates or it incorporates citizens' input into approval, the implementation, and then evaluation. Okay, so that is what the citizen-based budget does. Essentially, it is a budget technique where the citizens are included directly or indirectly to the budget processes of approval, implementation, evaluation, and then supervision. Okay, so that is what the citizen-based budget is all about. What this does is that it strengthens accountability and transparency. And then it is particularly relevant at the local government level. Okay, so everybody gets involved in the decision making. So if you remember, when it came to the imposition of the e-levy, the government had to go around to discuss with the citizenry to get the approval for the imposition of the e-levy, as well as the rate at which the levy was supposed to be imposed. Okay, so when it comes to the citizen-based budgeting, each citizen has the opportunity to get input into the budget. They also approve, they also help implement, evaluate, and then supervise. So these are some of the characteristics of the citizen-based budgeting approach. So one is that it should be an objective and technical document and not a political tract. So it should be deliberate, there should be a deliberate objective as well as a technical document that backs this approach. It should just not be a political tract. It shouldn't just be something that is used as a political gimmick, but rather there should be an objective and then a document that backs the citizens to be able to get their input, to be able to evaluate, to be able to assist in the implementation process. And then there should also be written with the needs of the general public. Okay, so the general public, they would have to be in mind when it comes to whatever means of communication, of communicating the budget. Everyone will have to understand. And then it should be linked to a more detailed explanation to provide simple access points for those who want to know more. So basically, the language has to be plain, and then it has to be detailed such that everyone can access information based on the budget. Okay, there are other characteristics as well that you may have to read and get the understanding. We also have the participatory-based budgeting approach. The participatory budgeting approach. So here, citizen involvement is allowed by the government so that communities may directly decide on how much to spend as part of the public budget. It also enables taxpayers to work with government to make the budget decisions that affect their lives. So that is it basically about the participatory based budgeting. participatory based budgeting. So, what do you think will be the difference between the citizen-based budgeting approach and then the participatory-based budgeting approach? Are you seeing any difference?
Yes,
Hello,
sir.
class. Are we here?
Yes, sir.
Are we seeing any difference with? Okay, so will anybody help us with the difference?
Sir,
Yusuf.
with the participatory based budgeting, it says that one starts with discretionary funds, money that is not set aside for fixed or essential expenses, as compared to the other approach, which is the citizen-based approach.
Okay. All right. So how is it different from the citizen-based approach?
It's different because those in government only budgeted for. But in citizen, all the citizens involved can take decision based on that.
Okay. Sorry, can you explain that again? Abraham.
Hello.
Abraham Lincoln.
Yes, sir.
Yeah, can you do the differentiation? Okay. Can you explain again for us?
Yeah, I mean to the participatory based budgeting, it falls under those people in the government specifically. They can take decision on that, and to the citizen, it cut across to individual. They will take view of the people living in the country in budgeting. Thank you.
All right. Thank you very much. Any other person, or we can? Okay. All right. So you realize that the names even at least help explain participatory based budgeting approach. You realize that in the citizen-based budgeting approach, when it comes to the decision-making authority, it still remains with the elected officials as well as public administrators. Okay. However, at that approach level, citizens are allowed to make input that may influence the decisions that the government may make. So when it comes to that, authorization of the budget still is made by the elected officials as well as the MMDAs and then state agencies. But when it comes to the participatory, okay, you realize that it says that it is a democratic process in which community members directly decide how much to spend part of a budget, a public budget. So when it comes to the participatory, the decision making or the actual authority over budget allocation lies with the citizenry. Okay, it lies with the citizenry, and then government will just have to come in to be able to make sure that their needs are being catered for. Okay, so that is just the little difference when it comes to. Also, we can talk about see, when it comes to the citizen-based budgeting approach, it would typically cover the entire budget document, including revenue, expenditure, priorities, performance information, everything related to the budget. Everything related to the budget. The citizen-based budgeting will cover all of that. Citizens are allowed to make input at whatever level or phase of the budgeting cycle. But when it comes to the participatory based, it is typically limited to specific portions of the budget. You cannot allow communities to directly decide on everything. But when at certain portions of the government, that is often left with the local level to be able to make those decisions and then to be able to use their discretionary funds to be able to do that. That's just the difference. When it comes to emphasis, the citizen-based budget emphasizes on improving transparency, enhancing accountability, and then strengthening trust between government and then the citizen. But then the participatory budgeting that focuses on deepening democratic participation. It also tries to empower communities, and then it also improves equity in resource allocation. So for instance, if you go to Cape 3 Point, they have oil. So at least there is an equitable distribution of funds to Cape 3 Point, since that's where the oil is coming from. So that is it. However, these approaches are not things we are familiar with when it comes to Ghana. For Ghana, we normally practice the bottom-up approach. So that is it. That is how we can differentiate between the citizen-based budget and then the participatory-based budgeting. The last approach to budgeting we'll be looking at is the program-based budgeting. So here, what is done is that we identify programs and then the associated activities within the organization, and then we formulate the budget in terms of those programs, and then we link them to the budget expenditure to clearly determine the result of each program. So for instance, now we have the big push agenda. We have other projects or programs that the government will want to embark on. When it comes to the program-based budgeting, the government will just plan the budget based on the specific programs that the government wants to embark on. That is what the government will do. So big push, we allocate funds to that, maybe 10 billion Ghana cedis. Maybe construction of regional hospital in Tamale. We assign a particular amount to it. Maybe a airport in Cape Coast, maybe a harbor in Cape Coast. We assign a particular fund or amount to it. So that's how the program-based budgeting, that's how it works. So what are the advantages? Policy delivery. So the policy-based budgeting, it links resource allocation to functions and the strategic policy objectives. So when it comes to costing, performance, management, authority, and responsibility, the effectiveness is very high as compared to other budgeting approaches. So here, we identify the necessary input to be able to produce the core operation and then the project, and then we assign funds to it. When it comes to performance, we can evaluate easily evaluate the performance because we link that to the project. Maybe after 3 years, we look at big push. We say we want to construct our routes from Takoradi to Cape Coast. Has it been done? So evaluating the performance of that is very easy when it comes to the program-based budgeting, as well as management authority and the responsibility. There is always a framework that covers the spending organization to be able to ensure that funds are utilized effectively and then efficiently. So those are the advantages. There are other disadvantages that includes the fact that DAs or specific needs of the citizenry may not be addressed. And that is because the government is just focusing on programs. So sometimes the basic needs of individuals may not be addressed when you are using this particular approach. So that is it for the second session. So the second session, we basically looked at the budget cycle and then the approaches that various governments use when it comes to budget at the public sector level. So that is it for the second session. So we would now discuss the third session. Hello, Daniel. Do you have something to say?
Yes, please.
All right, sure. You can go ahead.
A quick one. I think when you're trying to distinguish between the citizen-based approach and the participatory-based approach, you mentioned something like revenue. I didn't get that part well. I don't know if you get it.
I mentioned
you mentioned that the citizen focused on the revenue. I didn't get that part well.
Citizen focus on revenue.
Yeah, I didn't get it. The network went to this. I didn't hear that part. It mentions revenue and expenditure, something like that.
Okay. Maybe when I was talking about the scope. So, when it comes to the citizen-based budgeting, okay, what I said was that the citizenry are allowed to make input for the entire budget document. So, when it comes to revenue mobilization, what taxes, new taxes should we impose? What old taxes should we abolish? The input of the citizenry is considered at that level. When it comes to expenditure, what project should we embark on? What project should we stop? And all that. Every aspect of the budget document, the citizenry are allowed to give input, okay, for the citizen-based budget. But what I was saying that the participatory budgeting, I was saying that specifically focuses on specific portions of the budget. So I gave an example as maybe when you go to Cape 3 Point, because they have the gold, they may be assigned maybe 10 million Ghana cedis for the community. Now the community decides that this 10 million, maybe we need to use that for an astroturf. Maybe we need to use it for a stadium, or maybe we need to use it to construct a road. That decision solely lies with the community. So that is what I was saying. Okay. All right. Thank you very much.
A quick one.
Okay.
A quick one at that. The citizen-based budgeting. Does the government listen to the citizen when they give inputs during the budget presentation?
So that will be based on the discretion of the government. Sometimes they may, other times they may not. That's why the first difference I gave was that when it comes to the citizen-based budget, even though citizens are allowed to make their input, the final decision rests with the government. It still rests with the electoral officials and all that. It's just an input they are giving, so they may be rejected. But when it comes to the participatory, because that is just for a specific portion, the sole decision lies with the citizenry.
Okay, noted. Thank you.
Okay. Yusuf, I can also see your hand up.
Please, just a contribution.
Okay.
At times, the MMDAs are given an opportunity to engage with the citizen, which comes like in the form of citizen-based approach. The assembly or the president prepares its medium-term development plan, where the citizens, maybe they organize town hall meetings where the citizens are met for them to come out with their problems, what they want the government to do for them at that particular period of time, maybe the medium-time development program time period. So could this one be seen as the citizen-based approach of budgeting?
Yes, to some extent, but not entirely. Okay. If you want to practice the citizen-based budget, it has to be done at all MMDAs, but that's not what we see. Sometimes some MMDAs are given the opportunity during town hall meetings. Assembly members are given the opportunity to tell the MMDAs the specific needs of their assembly. Okay. But then in general, what we practice is the bottom-up approach, which sometimes may include some part of getting the input from citizens, but not entirely. Not entirely. If you would want to know the approach that we practice, it's mostly the bottom-up approach.
Okay.
All right. Any other? Okay. So if there are no other, then we can move on. Okay. This is also an interesting concept that we would have to learn. Now we are moving beyond the annual budget to 3 years or long-term development plans. The medium-term expenditure framework. This is something that is very important, and so would have to be addressed here as part of public sector budgeting. Okay, so by the end of this section, we will talk about Ghana's medium-term expenditure framework, the objectives of the framework, and then provide key tasks to the framework over 12-month budget cycle. So what is the medium-term expenditure framework? So it is a framework which refers to the expenditure for the present year and then 2 following years. 2 following years. So it provides a structured approach for aligning government policies with available financial resources over a 3-year time, over a 3-year period. Okay, so this medium-term expenditure framework, it is the budget that we prepare for the first year as well as 2 subsequent years. So sometimes we roll over the processes and then we repeat every year so that the aims at reducing imbalance between what is affordable and what is demanded by the line ministry. It also ensures that projects that were started in the initial year, at least we give ourselves 3 years, and then we hope that by the end of the period, those projects are implemented. So the medium-term expenditure framework was implemented in Ghana in 1999, and it covers the 3-year time period. The first year would have to cover the expenditure for the current financial year, and then it also covers 2 years of expenditure estimate. So the policy was implemented in Ghana because the government of Ghana wanted to increase the predictability of budget planning. Okay, so that projects that we could not complete in the first year, we can complete them in the second year. If it's not completed in the second year, we can complete them in the third year. Okay, and then it also ensured fiscal discipline, and then it also helped mitigate budget planning weaknesses and all that. And so, as a result of the MTEF, government is able to link its priorities with the budget within a sustainable spending period. It's also able to highlight the trade-off between competing objectives of the government. And then it also helps link budgets with policy choices that have been made. Lastly, it also improves outcomes by increasing transparency, accountability, and then predictability of all government policies. So that is what is being done. So what are the features of the medium-term expenditure framework. The medium-term expenditure framework. So one of its feature is the 3-year rolling nature. So you don't just prepare budget for a year, but it also rolls over 2 subsequent years. So that is the clear feature, one clear feature of the budget. So another clear feature of this budget is that it helps combine top-down and then bottom-up approaches to budgeting. Okay, this is to help ensure macroeconomic stability as well. So it is able to combine both the top-down and then the bottom-up approaches to ensure effectiveness. And then it is also able to help the whole government framework. It also helps to support and then cover all sectors to promote coordination across ministries by ensuring that the sectorial budgets are aligned with national development priorities. So this will help reduce fragmentation and then duplication of projects. Okay, so that is the essence and then the features of the medium-term expenditure framework. We also have objectives, and maybe we'll discuss just 2 of them. The first objective is to ensure that public resources are allocated in line with national priorities as outlined in the long-term development plan. So we have a long-term development plan. We have a 30-year development plan. As to whether that is also complied with by our various governments, I think the implementation of that long-term plan is a bit problematic. Okay, each government will want to come up with its own rules. Okay, but then the MTEF was supposed to at least be able to strategize and then help achieve the long-term development goals of the nation. Okay, so it helps to be able to prioritize the long-term goals of the country into achievable objectives within the 3 years. It also helps improve transparency, cooperation among all ministries. So how does the government prepare the medium-term expenditure framework? How does it do that? So it starts by allowing the MMDAs begin the process of reviewing their medium-term medium-term development plans. And then they also assess whether existing programs should be continued, or should they be modified, or should they be discontinued. So those decisions are reflected in the forward expenditure estimate. Okay. So in Ghana, the preparation of the medium-term expenditure framework follows key stages in the budget cycles. So MMDAs will begin by reviewing their own medium-term development plans, and then they will decide whether they want to continue, discontinue, or what have you. So that is, it starts in March. By July, they will have to align their annual action plans with the medium-term expenditure framework. And then by October, budget proposals are integrated with the program-based budgeting, which is submitted to Parliament for approval. So that is what the medium-term expenditure, that is how it is being planned. It starts from March all the way through to July to October. So that is how it is being planned. So we have the budget divisions budget development group, which coordinates the MTEF process, while the budget committee within each MMDAs lead its preparation. So the budget development group ensures oversight and quality control while they work closely with MMDAs throughout each year. So that's how the budget is being prepared. Now, what are key elements of the MTEF in Ghana? What are the key elements? So the first is the medium-term fiscal framework. So the government of Ghana will know how macroeconomic development will impact overall expenditure projections, and then the financing of the budget deficit. So how do we finance budget deficit? And should we go for loans? Should we borrow? Or what do we do? So generally, the medium-term fiscal framework is just to ensure how government would know the macroeconomic indicator, how we expect it to be, and then how that will impact our revenue and then expenditure projections. So that is one element. The second element is the budget planning and then management issues. The issues include the wage bill. Should we increase salaries and all that? Public investment management, as well as expenditure efficiencies within the MMDs. So that is an element of the medium-term expenditure framework. The third is the spending priorities. So here, they ensure allocation, the resource allocation to reflect strategic objectives and then program priorities across various sectors. And then lastly, we have the expenditure plan, which will have to align the program level spending with 3-year resource envelope and ensure consistency with the annual budget. So these are the elements of the medium-term expenditure framework. So the medium-term expenditure framework key tax over 12-month budget cycle. So 9 months to 12 months budget, and before the 9 to 12 months before the next financial year, the following tasks are performed to integrate the MTEF and budget formulation. So the government of Ghana set out national strategic priorities. So we have, for example, the Ghana Shared Growth Development Agenda. And then MMDAs will set out strategies which include the MOF with input from GRA, the non-tax revenue unit, compensation management unit, the Bank of Ghana, the National Development Planning Commission, and other organizations that the Ministry of Finance will have to consult and then get their input. Then MMDAs begin costing their programs. Then Ministry of Finance prepare the budget framework strategy paper, which includes temporary expenditure ceilings. And then when it comes to 6 to 9 months before the next financial year, Cabinet reviews and then endorses the budget framework strategy paper. And then the budget framework paper is submitted to Parliament to inform parliamentarians about budgeting policies for the upcoming financial year. And then budget guidelines are disseminated to MMDAs. So that is how key tax over the 12-month cycle is done. 3 to 6 months before the next financial year, MDAs submit and review by MOF during technical hearings, and then technical and other issues are discussed during the hearings. And then MMDAs will have to align their budget proposal to the program-based budget. MOF updates their macroeconomic framework, as well as the MOF prepares the MTEF as well as the budget. And then 3 months before the next financial year, the final estimates are submitted to Parliament for approval. And then MMDAs begin to prepare their annual action plans that are consistent with the budget and no final ceiling. So that is how the MTEF is done. We also have the sequential process. So stage one is the top-down approach. The resource envelope for MTEF is determined from the forecast of tax and non-tax collection and other sources of revenue, as well as data about how much government intends to borrow. So that's the top-down approach, which is step one. Step two is the bottom-up approach. While MOF and stakeholders prepare the macro framework, MMDAs develop their expenditure plans based on MTDF's strategic priorities as well as the forward estimate. So if you remember, we said one of the key features is that it is able to reconcile the top-down and then the bottom-up approaches together. And so MMDAs often request funds that exceeds resource envelope, and that is discussed at stage one. So negotiations are done between MOF and then MDF to arrive at allocations that are adjusted to be able to reconcile with the national budget. So that is what is being done. Okay, Mabel. Hello, Mabel. Hello, Mabel. Mabel Atta. Or it's a mistake. I can see you raised your hand. Okay. All right. So that is it for the third session, which is about the medium-term expenditure framework. We've learned about how it is done and how it is able to integrate the top-down and then the bottom-up approaches. So that is it for the third session. The fourth session. So the fourth section. For the fourth section, we will learn about the regulatory framework of budgeting in Ghana. We would come to learn about IPSAS. So we learned about IPSAS the last time. So we'll look at the legal frameworks for planning and budgeting in Ghana, So just as we said the last time, when it comes to planning and budgeting, it is governed by the supreme law, which is the Constitution, other laws, and then regulations that define accountability structures and reporting requirements, where we also have the defined rules and responsibilities, which are clear delegate budgetary rules that key institutions such as Parliament, the Ministry of Finance, MMDAs, and as well as the tax collection agencies, they play. And then the Bank of Ghana, they play in the legal framework for planning and budgeting. We also have expenditure controls. So we have regulations that outline spending limits. And then they also specify the portion of IGF or internal generated funds that MMDAs can retain for their own developmental projects. We also have the parliamentary oversight. And then we have reporting and justification. So MMDAs will have to report budget performance to GAS and then the president as well as Parliament, and then they justify resources request during the budget hearing. So number one is the supreme law. So chapter 13 relates to anything finance of the Constitution. The 1919 Constitution talks about anything finance. Now in Article 175, it establishes the consolidated fund. Okay, Article 176 and 177 set rules for managing the consolidated fund. Article 171, Clause 1 of the 1992 Constitution requires the President of the Republic to present the budget before Parliament at the end of the financial year. So according to Article 179, Clause 1, it is the President's responsibility to present budget to Parliament. But then, from what we've seen in subsequent years, in previous years. We've seen the president delegating the Minister of Finance, and then I think at one time we saw the majority leader present the budget on behalf of the president. Okay, but then according to Article 179 of the 1919 Constitution, it is the president's responsibility to present budget to Parliament for approval. Now, Article 181 Clause 1 also notes that Parliament may authorize entering into any agreement for granting loans of any public fund or public account. So it also talks about Parliament's approval authority, as well as the role that the Bank of Ghana will play in maintaining stability of Ghana's currency. So the supreme law, which is the Constitution, it sets out the rules for preparing budget in Ghana. We also have the Financial Administrations Act, Act 654 of 2003. We have the Financial Administration Regulation 2004. We have the National Development Planning System Act, Act 480 of 1994. We have the Public Procurement Act 2003, Internal Audit Agency Act, Act 658 of 2003, and then we have the Financial Administration Act, Act 921 of 2016. So all these are are legal frameworks that underpin the preparations of the budget, planning, preparation of the budget. So let's look at the key framework that governs. Hello, Thomas. Hello, Thomas. All right. So.
Sorry.
Okay. All right. You might mute yourself for us. Thank you. So IPSAS, the International Public Sector Accounting Standard, IPSAS, specifically IPSAS 24. Now, objective of this is that this standard requires a comparison of budget amounts and the annual amounts arising from execution of the budget to be included in the financial statements of entities which are required to or elect to making publicly available their approval budget and for which they are therefore held publicly accountable. The standard also requires disclosures of an explanation of the reasons for material differences between the budgeted and the actual income. So recently Ghana adopted IPSAS, and then one of the key objectives of this is to compare the budget amount to actual amount. So where there is a shortfall for the budgeted and then the actual amount, the standard requires that there is a disclosure of explanation. You don't just disclose the variance, but you also explain why the variance occurred. You have to explain that. So that's one purpose by IPSAS. And then we also, what is the scope of IPSAS? So an entity that prepares and presents financial statements under accrual basis of accounting shall apply this standard. So any entity or corporation that presents the accrual basis of accounting. Remember the last time we spoke about the cash basis and then the accrual basis, where we said that under the accrual basis, record of accounting expenditure and revenues is being done when the transaction occurs and not when cash is transferred. So when any entity is using the accrual basis of accounting, they will have to apply IPSAS, and that is what most of our organizations do. So they will have to apply IPSAS. So the standard applies to public sector entities other than the government business enterprises. that are required to elect or to make publicly available their approved budget. So that is the scope of the budget. Now, approved budget. Now, it is anticipated that revenues or receipts expected to arise from the annual or the multi-year, which is the 3-year medium-term expenditure framework budget period, based on the current plans and anticipated economic conditions during the budget period. And then the expenses also for that period, they will have to be laid down. So an approved budget will have to contain the anticipated revenue and then the anticipated expenditures as well. In some jurisdictions, budgets may be signed into law as part of the approval process. Okay, so in other jurisdictions, approval may be provided without the budget becoming a law. But however, whatever the approval process, the critical feature of the budget is that there should be an authority to withdraw funds from government treasury or a similar body, for us, the consolidated account. Okay, so that is some features of the approved budget. And then we have the original and final budget. The original and final budget includes residual appropriated amounts automatically carried over from prior years by law. So sometimes, if you're unable to meet certain expenditure, it is carried forward to the subsequent year's budget. So the original and final budget contains some of these appropriated amounts that is carried over the period. So, for example, governmental budgetary process in some jurisdictions include a legal provision that requires automatic rolling forward of appropriation to cover prior year commitment, because you cannot start a project and then stop. It has to be continued. And so the original and final budget contains all appropriations which were not fulfilled in the previous year. Some funds ought to be committed for the current year to be able to complete those projects or programs. It also encompasses possible future liabilities based on current contractual agreements. So in some jurisdictions, they may be referred to as obligation or encumbrances and include outstanding purchases and all that. So the approved budget, just as we saw, it just includes the anticipated revenues and then anticipated expenditure for the upcoming year. But then when it comes to the original and final budget, it includes all appropriated amounts that is carried over previous years by law. And then presentation of a comparison of budget and then actual amount. So just as we indicated earlier, according to IPSAS, your budgeted and actual amount will have to be compared each year. You will have to discuss the variance and then explain why the variance occurred. And then you give detailed explanations to the occurrence of the variance in the budget. Okay. So the comparison of the budget and actual amount shall present separately for each level of the legislative oversight. So the original and final amounts, the actual amounts on a comparable basis, and then by way of note, disclosure and explanation of the material difference between the budget for which the entity is held publicly accountable and then the actual amount, unless such explanations is included in any other public document issued in conjunction with the financial statement. So that is what IPSAS requires. It requires that the original and final estimates are recorded, the actual amounts in comparison basis are recorded, and then a note disclosure is also done to be able to ensure that transparency and accountability is upheld. Okay, so that is it for IPSAS 24. Are there any questions regarding that? If there are not, then we can continue with section 5. We can continue with section 5. Are there any questions? Okay, so advantages and limitations of budgeting in public sector. So we'll outline the advantages, and then we'll also outline the limitations. So this is a discussion that we'll have. So as part of the advantages, we have planning orientations, model scenarios, profitability review, assumptions, performance evaluation, and all that. So any person can pick any of them and then explain to us. So our contributions are welcomed. We can just choose any of the advantages and then highlight what we mean by that particular objective being an advantage of public sector budgeting.
Thomas, can you start for us?
So who will be willing to start with for us?
Thomas was sharing.
Daniel. Okay, Yusuf.
Let me start with the cash allocation. The cash allocation to me simple means when the budgets are or budget figures or values are ascertained, it's the responsibility of the central government to make cash allocation to each or various MMDAs for them to be able to execute whatever plans the central government has for them. That's where we witness cash allocation to various sectors, departments, and agencies so that they can go on and deliver to the satisfaction of the government or whatever the government has made for or has planned for, say. So it's appropriation of cash to various MMDAs, agencies, let's say ministries and departments. Hello?
Yeah, hello. All right. Hello. We are listening.
So that's what I'm saying about the cash allocation. When the figures are ascertained, the budget figures are ascertained, let's say the actuals, the figures are ascertained, government then allocates or apportioned resources or cash to the various departments and agencies or MMDAs for them to be able to achieve whatever budget or plans that they've made for that fiscal year, because they need money or they need resources to be able to execute whatever plans they have for that particular year or for that particular medium term development plan. So they need cash allocation for fulfillment of their budgets.
All right. Thank you very much.
Okay, sure.
All right, Thomas.
I'll take the first one, planning orientation. So this could be the mindset of an organization or government uses to get goals or deciding how to achieve them. Simply, it's thinking ahead before taking actions. That is, the actions the government or the individual company or organization will take. One, focuses on the long-term goals and objectives. And then two, involves in forecasting future needs and challenges. And the last but not the least, it helps the indifferent allocation of resources, reduce uncertainty and waste. Thank you.
All right, thank you very much, Thomas. Thank you very much. One more, and then we move on. Any other?
Yeah, please, Daniel is on the floor.
All right, Daniel. Your people want you to talk. Hello, Daniel. Hello, Daniel.
Yes, please. Say. I wanted to know. Okay. I turn up. You read the next. Okay, please. I'll talk about performance evaluation. With a performance evaluation, it helps the citizen to check the government being like, let me put it this way, if the government in power, like, let me use the previous administration.
All right, thank you very much, Daniel. I think we can move on. Explanations. I really love the explanations that are being given. So limitations. Some of you have never spoken in this class. Limitations. Etonam. Hello, Etonam.
Yes, sir.
Can you choose any of them and then explain how they are limitations to public sector budgeting?
Okay, I'll choose the model scenarios. Okay, with the model scenarios, it talks about the changes that affect the how do you call it? The business or the budget.
Limitation.
Say sorry. So the model scenario, it depends on the assumptions. That is based on the estimating or the time consuming.
Okay, thank you very much for the effort. We really appreciate.
Hello, sir.
Yeah, hello.
Hello, sir. I want to take the inaccuracy.
Okay, you can go ahead.
Okay. Thank you. The inaccuracy is also like the data quality issues. That's the outdated or complete data leads to the flawed decisions. And also, we can talk about the lack of expertise. That we have the limited technical skills in data analysis or specific field. And also, it also has impact that let's say inefficient resources allocation. That's a allocated funds or resources. And we can talk about the reduced trust. That the citizens will lose trust in the government and institutions. Okay, and also addressing this can improve public sector. Yeah, so I think that's what I have to say about it.
All right, thank you very much, Bismarck. We are grateful for your contribution. So I think we can move on. So the last section for today will be the principles of budgetary governance. The principles of budgetary governance. So what do we mean by budgetary governance? So budgetary governance is just the laws, the processes, structure and institutions that ensure a transparent, efficient, and sustainable budgeting system. That is what we mean by budgetary governance. So, just as we know, the Ministry of Finance, they lead in the budget process, and then they help incorporate all inputs from government officials, civil society, and then the entire populace. So that is what we mean by budgetary governance. All laws, processes, structures, and institutions that ensure that there is a transparent and an efficient budgetary system. That is what we mean by budgetary governance. Now, a well-governed budget system builds trust. Okay, it builds trust and help to be able to satisfy the needs of the citizenry. And so, once there is a well-governed budget system, the public concerns are addressed, and then government plans effectively, and it also manages to achieve its developmental projects as well as social interventions. So there are several principles that we would have to learn. One is that budgets should be managed within clear, credible, and predictable limits for fiscal policy. So what this means is that you see, we have a sound fiscal policy which will prevent excessive debt accumulation, and then we build buffers during economic growth period. So in order not to ensure that we are borrowing excessively, we can have a fiscal policy which will help prevent borrowing excessively to be able to finance our budget deficit. So that's one thing we need. So every budget has to be clear, it has to be credible, and there should be predictable limits for fiscal policy. Basically, there should be fiscal discipline, so that at least we'll be able to spend based on the income or the revenues that we would generate. The government should also commit to sustainable fiscal policies, reinforced by clear, verifiable rules and independent oversight. Okay, so that is what the principle is about. Second, the budget should be closely aligned with the medium-term strategic priorities. You remember the medium-term expenditure framework. The principle is that the budget should align with that medium-term priorities to be able to ensure that projects are categorized and then completed effectively. So the MTEF, it sets expenditure limits for key categories, and it aligns with government's budget constraints, relies on realistic baseline forecast and all that. So the second principle is that budget should be closely aligned with the medium-term expenditure framework. And then principle 3, the capital budgeting framework should be designed to meet national development needs in a cost-effective and coherent manner. So I don't see why you prepare a budget which does not align with the needs of the citizenry. So for instance, maybe we need free SHS, and then you decide to give us roads, okay? Even though it is a developmental project, but if it does not align with our national development needs, then it will not address the concerns of public. It also supposed to ensure that capital investments are based on objective assessment of economic gaps, infrastructure needs, and then social priorities. So that is the third principle. Every budget should be designed to meet national development needs in a cost-effective manner. 4, budget documents and data should be open, transparent, and accessible. So that's why every budget every budget that we know is publicly available on Ministry of Finance website, as well as some news portals. So they have to be available, they have to be factual. The data will have to go through the various cycle we spoke about: the policy formulation, debate, implementation, and then review. The fifth principle is that debate on budgetary choices should be inclusive, participative, and realistic. Parliament will have to debate. Sometimes it will have to involve the citizenry to be able to ensure that the budget is ensuring that the needs of the citizenry is addressed. So that is the fifth principle that we would have to comply with. The sixth is that the budget should present comprehensive, accurate, and reliable account of public finances. So the budget is a contract of trust between the citizens and then the state. And so full disclosure will have to be done. Comprehensive, and then it has to be accurate. Because remember, there are laws that are governing this. And so the transparency will have to be reinforced. And then the limits that we've set will also have to be achieved. The seventh principle is that budget execution should be actively planned, managed, and then monitored. I think we've spoken extensively about this. Performance, evaluation, and value for money should be integral to the budget process. So we don't just estimate the budget, but we have to ensure that MMDs, state agencies, individuals, corporations are complying with the budget. And we need to ensure that people are not going beyond what has been approved for them and all that. And so we also have to ensure value for money. Each project will have to be assessed to ensure that fair value is given to all contracts and all that. We should ensure that contracts are not overinflated, but then fair valued. They are fair valued. So that is one thing that we will need to address in the budget. The ninth principle is that there should be long-term sustainability, and other fiscal risk will have to be identified, assessed, and then managed. Any contingent liabilities that we foresee or potential risk that we foresee must be reported in the annual budget. Maybe we expect that Russia-Ukraine war would be an impediment to economic growth. That will have to be stated in our budget, because we feel that is a potential risk to our annual budget, and it will challenge our revenue mobilization. So we'll have to ensure that that is done. Long-term challenges such as demographic and environmental factors will also have to be assessed and all that. And then the last principle is that there should be integrity and quality of budgetary forecast. We do not just have to forecast revenues, but then we will have to do that integrally. There should be integrity-backed budgetary forecast, as well as fiscal plans and budgetary implementation should be promoted through rigorous quality assurance, including independent audit. Okay, so the Central Budget Committee must gain the trust of stakeholders, including government bodies, parliament, and then other public and international observers, so that we will be able to come up with a budget that is consistent with all these principles. Okay, so that is what we want to discuss for today. Are there any questions? Are there any questions or contributions to the discussions we've had for today? It has been a very wonderful discussion we've had today.
Yes.
Are there any questions or contributions?
Oh, it's okay.
It's okay, right?
Yes, sir.
Okay, so I think it is time for us to end. I am particularly grateful for the wonderful contributions that you made to make the class a successful one. And we're also grateful for the intuitive questions that was asked to be able to make this class a lively one. If there are no questions or concerns, then I can see a lot of thumbs ups. We will end the class for today. Thank you very much for joining. See you next 2 weeks.
Thank you, sir.
Thank you too.
Thank you, sir.
Sir.
All right, bye.
Bye.
Bye, sir.
Thank you.
Madam Etonam.
Yes.
Yeah, please, so we need slides. So have you seen that one is a little bit easy for us for identification of some of the meanings and to examples in the book. Have you seen in our hard copy there are some of the information that are not in it. So
Okay.
his is very meaningful. So please, we will need his slide.
Okay. I will access forward it on the page.
Okay, thank you very much.
You're welcome.